Hello, Smitty from Arch Public here, and occasionally we get questions from folks that say, look, I have little to no cash available. I am upside down on my crypto, and frankly, who isn't right now? And they say, is there anything that your tools could potentially do to help in my situation where I don't have a lot or any more cash to keep adding to maybe be buying below my cost basis? I bought a lot up high and wanted to put together this example to talk about just that and a couple options that could be relevant or interesting to you if you find yourself in this situation. In this case, we're going to be looking at Solana. So I have a Solana chart up here, and in this example, we are assuming that we bought $100,000 worth of Solana at $240 roughly. And you can see I have this cost basis line right here. There's my cost basis. Maybe it was going up and we just thought it was going to rip forever, and we went all in, and here we are. Instead of the current price being $240, or it looks like it was maybe $241 in my example here, the current price is $86.72. So had we bought $100,000 worth of SOL at $240, we would be down. You can see I'm going to be referencing these yellow numbers over here, but we would currently be down roughly 64% off of that, and obviously not a great position to be in. Now, we would have purchased about 415 souls in this example, and what I wanted to do is just show you what one option might be, and there are risks associated with all of this. Again, not financial advice, but what's something that perhaps if I were to leverage Arch Public's tool set, could I do to A, free up cash, B, lower my cost basis, and try to put myself into a position where I am, again, have more cash available to make future buys and have lowered my cost base, hopefully setting myself up for a future run. Hopefully we get a big run at some point, but let's say maybe we stay choppy for a while or whatever it may be. And simply here in this video, just for demonstration purposes, I'm going to demonstrate what it would look like enabling our tools, our algorithms, to sell below your cost basis. So obviously any sell right here would technically be for a loss, right? Well, we bought here, any sell under that number is going to be for a loss. But can we use that freed up cash? Can we sell into strength? Can we sell into some green candles? Free up cash and then redeploy that cash more intelligently using the algorithm, and ideally spreading those buys out over time so we can pull our cost basis down and put ourselves in a good position. Now, in this, I started this in September, is kind of the time frame here that we're looking at. And we're going to look at a few things. So we're going to look at the total amount of crypto that we have. So we have $415 or 415 SOL in this example. And also our cash available right now is 0 because we've deployed it all. And you'll see that right here. I'm looking on the right in these orange numbers, and our current portfolio value and our cost basis of 240. Now, I'm going to simply click a button here. Obviously, it's going to be a little bit more nuanced, but we can set these up fairly easily for you, or assist you in kind of accomplishing something similar depending on where you're at and what you're trying to accomplish. And I'm going to simply turn that on. I won't get into all the details here, a lot of different settings, a lot of different things, but essentially what we're doing is we are, when there's a good sell signal, we're selling 10% of our holdings, and when there's a buy signal, so there's dips in the volatility in the price, we're buying with 10% of our available cash that we've freed up from the algorithm. So I'm going to go ahead and turn this on, but when I do that, I would like you to watch this cost basis line right here, and then we'll review some of the numbers. So I'm going to go ahead and enable the algorithm to sell below our cost basis. And you can see here that we went from that 240, and currently right now, so we've taken advantage, we've sold into strong green candles, and we've rebought back in at even lower prices all along the way. So our cost basis has gone from $240 all the way down. Right now, it's sitting at, in this example, at $118.78. So cutting down more than half our cost basis. And the other interesting thing here that I'll draw your attention to is you can see this current cash. We're currently sitting on about just a few dollars shy of $20,000 in cash that's available for the algorithm to continue buying. And this is an example of what one can do. We'll pull it down. Our cost basis has gone way down. We have a bunch of cash available. And this would be an example of maybe a time frame, with $20,000 now available, an original investment of $100,000. I now have a 20% cash to crypto ratio, and that might be a really good time to switch this setting off and shift into more of a traditional profit-taking setup or accumulation setup, allowing us to buy even more with that cash, pulling down that cost basis. And so there, just to look at some of these numbers, and I apologize, this isn't a pretty spreadsheet, but obviously you can see where the cost basis is. The thing here too, we started with 415. Now we've sold off some of that, so we now have 377 SOL. So less SOL, more cash, much lower cost basis. And so let's maybe look at these numbers and just see how that plays out and what that might look like. So again, here not anything hyper complex here, but you can see we start with 100K worth of Solana at 240. Crypto number. This is just the amount of SOL that we'd own right now if we had run this from September to now. We start with the buy and hold strategy. We had 415. We'd still have 415. We would have zero cash right now. Our cost basis would still be $240. Our cash plus crypto current value would be $36,000 roughly, and that would be down 64%. Now, running the algo, we would actually be currently holding 377 SOL. So we didn't have to fully exit the position. We've been buying back in lower and lower. We'd have that $20,000 in cash. Our cost basis would be $118. And the value between the cash and the crypto that we own at the moment would be $53,000. So still down off of our original $100,000 as far as totaling all of that up. But the really interesting thing, and I did the math on this, so it's down 47%. However, that cash position is really, really interesting and enabling us to get really flexible. So just in a hypothetical, what I went through is said, okay, well, what if right now I bought $20,000 worth of Solana at this price? And this would maybe be more equivalent to if we were choppy for a while, I stopped the algorithm selling below cost basis and I just let it buy now moving forward and deploy that $20,000 in cash, letting the price go wherever it may go. But let's just say I took that $20,000 and bought the Solana right now and it ran up tomorrow back to $240 per SOL. Now, in our buy and hold, we would be break even at that point. But if we had taken this $20,000, that had been fully deployed back into Solana at the price that it's at right now, the value of that portfolio would be sitting at, if the price shot up tomorrow back up to $240, would be $145,000. So the difference here is break even or a profit, unrealized if we didn't sell any, but just in this example, but profit of 45%. And now this is in that extreme example, but even if that didn't happen and we just let this run, we would be deploying that $20,000 at lower and lower prices. Once that gets deployed and we hit whatever timeline we hit where the price goes back up, we can significantly put ourselves in a position to take profit, to be in profit, and at a cost basis that is much more attractive than than our original buy and hold price. So a couple different things going on here. Hopefully this has been helpful for you. Just wanted to give that example. If you have questions or want to dive in or want to look at doing something like this with your crypto, we'd be happy to talk to you. All right, thanks again.